Leigh here from MPG. I'm actually recovering from a bit of an illness this week, so today's video has been put together using AI. I didn't want that to stop you from getting your weekly Sunshine Coast property market update, so let's get into it. The first few weeks of 2026 have given us a really interesting contrast between how people feel and what's actually happening in the market. The RBA lifted the cash rate back to 3.85%, and as you'd expect, confidence has dipped a little. But here's the key point: prices haven't dipped with it. Strong migration, low supply, and a very resilient labour market are continuing to hold both national and Sunshine Coast values steady. Inflation is still running hotter than the RBA would like, and housing costs are playing a big part in that. Things like rents, insurance, and construction. National rents are up almost 44% over the past 5 years, while wages have risen around 17%, which explains the ongoing pressure renters and buyers are feeling, and that tightness is supporting higher prices. Across Australia, dwelling values rose 2.4% for the quarter and 9.4% over the year. Homes are selling quickly, stock levels are tight, and investor activity remains strong. Cotality's latest housing chart pack really confirms these trends. Regional markets continue to outperform, with Southeast Queensland still right near the top. If you look at the charts for quarterly and annual growth, you'll see Brisbane, Perth, and many regional areas posting some of the strongest results nationwide. On the rental side, national rents are up 5.4% over the year, and yields remain tight, a big driver behind the return of investor demand. So what does the RBA want Australians to do from here? In short, they're hoping people will ease off discretionary spending, save a little more, and slow down wage pressure. By cooling demand gently, they can slow inflation without harming employment. Economists expect a short pause in confidence rather than a major shift in prices. With supply still extremely low, values are likely to stay steady, not fall. This also means more buyers will shift toward units and townhomes for affordability. For finance-ready buyers, this calmer period can actually be a great window to secure a property with less competition. For buyers, this is your chance to negotiate with more breathing room. Here on the Sunshine Coast, the market has stayed steady over the past couple of weeks. Open homes are well attended, inquiry is strong, and demand is healthy across suburbs like Boodarim, Mooloolaba, Mountain Creek, and the Coastal Strip. Vacancy rates in many areas are below 1%, which is pushing rents up and making the region even more appealing for investors. That's this week's update. If you'd like help navigating the market, whether you're buying, selling, or planning ahead, feel free to reach out anytime. Talk soon.